Let's talk about silver and gold. David Morgan joins us right now, gold analyst and founder of silverinvestor.com. And really, David, let's start with gold because gold has been taken on the chin like equities have here recently. You see this continuing, or you see maybe the turnaround where the dollar once again becomes under pressure and gold makes a little bit of a rebound here in the short term?
Well, I've been saying on an intermediate or short-term basis that 1,000 basis the U.S. dollar is going to hold. And it looks so far as if that's a true statement. There's a lot of talk about what's called the Chinese put, the insurance policy basically that the Chinese countries are willing to buy gold in the open market around the $1,000 U.S. price level. Now, no one can prove that to be true. The market has to prove that. But right now we know that India bought 200 tons of gold recently in the open market through the IMF sale, and there's rumors that China wants to buy the rest. So I really think that we're going to have to wait and see to verify that as a fact, but it certainly is acting as if the $1,000 level will not be breached.
David, when we hear about these significant sales of gold to China and to India, do those in and of themselves have a big impact on the market?
No, they do not have a big impact on the market as far as the amount of money that changes hands. But psychologically, in my view, it's a huge impact. Because what it really means is that these other countries are saying, I'd rather have gold than U.S. dollars.
Yeah.
China, in fact, has said several times recently, and everyone knows about Geithner's trip, that we really are not that happy with the amount of debt load that the United States is putting out throughout the world. And we're really kind of fed up with the amount of treasuries that we're buying. And I think that manifestation is taking place. So where are they going to go? Right now, they're going to an alternate currency, one that's held its value for 5,000 years, namely gold.
Yeah, but, I don't know if I buy this anymore. This whole notion that the U.S. dollar's devaluing, it's at a high, 7-month high against the euro. I think it's 7 months. We got more money coming into treasuries than we've seen in a long time. So if that's the case, then run for the hills, go away. But we're not seeing that. We're seeing a lot of people talk the talk, but they're not necessarily walking the walk at the end of the day.
Well, I think that's changing because there is a buyer of last resort. Certainly no one wants to see anybody default on their debt. And that's, of course, what's causing this euro problem right now is there's rumors or there's concern that the euro may, Spain, Greece, Ireland may, quote unquote, default on their debt. Now, in a fiat-based system, really that's almost impossible because the central banks can come in and rescue the day. Same thing with the U.S. dollar. Certainly, if China decides they've bought enough, they're going to buy a certain amount and no more, the Federal Reserve of the United States, that private banking system, can come in and buy the rest of the U.S. debt. So it becomes a question of what is value. I mean, the Federal Reserve itself admits that the U.S. dollar from the time of their founding, and the Federal Reserve was founded to keep a strong currency, has lost 96% of its value. So certainly is the dollar doing good against the euro? Yeah, right now it is. But that isn't doing that well relative to the long-term perspective, meaning if it's supposed to be so solid and it's supposed to keep its value, it should be roughly the same equivalent purchasing power that it was in 1913. But it's only worth about 4% of that value today.
I don't know if we could compare to 1913, though. All right, so you're saying silver. You're saying that you got, and I quote in your bio, seduced by silver at the tender age of 11. So is silver the place for us to be as opposed to gold?
No, I think, on an international or a multinational level, no. I mean, gold is a much bigger market, and it was used for international settlement up until August 15th, 1971, when Nixon closed the gold window. As far as the merchant class, or the average people across the planet, silver has always been the money of choice because it was more abundant at the time and far lesser value than gold. So I think if you are somewhat, to my view, that you might consider silver is actually a smaller market by far than gold, and therefore I believe it has far more upside than the gold market.
Quickly, copper, anything with copper or any of the industrial metals like, or other industrial metals other than silver like platinum?
Absolutely follow them all, not as closely as I do the precious metals. Copper, as we all know, is really a good leading indicator as far as what the industrial base is doing. Copper got weak in 2008 with the financial meltdown. It's come up quite a bit. It's kind of wallowing here, similar to what gold's doing. I'm bullish on all the metals longer term, but we are in some rough waters right now with the currencies going back and forth. Who's the strongest? Euro, dollar? Is it the pound? Who is it? And I don't think that's going to be reconciled. Let's face it, there's been a lot of talk about usurping the dollar as reserve currency, and that's not just me, in the international climate as well.
Right. David Morgan, thank you so much. Gold analyst and founder of Silver-Investor.com, who, according to your bio, got the silver bug at the age of 11. I'm impressed.
I did. That's when we went off the silver standard. We went from silver-based currency to the Johnson slugs.
Ah, all right.
And you knew that at 11, huh? Good for
I
you.
saw that at 11 years old, and it
Thank
impressed
you.
me. That's
for
what
being
caught
with
my
us.
attention.
Thank you, David. That's good stuff.
I think I was watching Scooby-Doo.
When you were 11?
Is that about 11?
Yeah. That was trading baseball cards. I was like, God, I got to get...
Oh, so you were industrious back then. I mean, not so much. I was
trying to be, anyway.
Scooby-Doo.